Welcome to our podcast series, Furthering the Frontiers, brought to you by Digital Frontiers Institute. My name is Sarah Corley and I'm Deputy Director at DFI, and I'm going to be your host for today's podcast on the history of financial inclusion. I'm joined today by Terero Nemo, who is also Deputy Director at DFI, and she heads our Certified Digital Finance Programme and is very passionate about financial inclusion. Welcome, Terero, and thanks for joining us today.
Thank you, Sarah. I'm so happy to be here and I'm excited.
So tell us just a little bit more about yourself before we start the conversation today.
Okay. So my background is mostly financial services. I worked for banks in Zimbabwe, and then I worked for the Central Bank of Zimbabwe as well as a bank examiner. Then I moved to Johannesburg, where I did some management consultancy, and then I worked for a fintech. So I think that was the exciting part of my career, actually, merging that regulatory background with the fintech. And I worked on sub-Saharan markets, pushing projects to do with low-cost banking. And that was very exciting as well. But then I found out that I got more and more passionate about serving the underserved, and I wasn't doing as much in the role that I had. So I started to do some research with the University of Cape Town, and that launched me into development. I think the way I started speaking and the way I started thinking, I actually attracted the development sector, and that's how I joined Digital Frontiers, as a deputy director. And I did some program design and fundraising, and now I am the CDFP lead, a very exciting role, which I'm very honored to do every day.
Fantastic, Terero, and you've obviously had an amazing career and lots of different experiences that have brought you to this point in your career, and it's lovely to work with you. And I'm really keen to pick a bit more of this research and this knowledge you have about financial inclusion, because that's the topic of our podcast today. So according to the World Bank, financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that meet their needs, whether this is transactions, payments, savings, credit, insurance, or anything else that we can think of that needs to be delivered in a responsible and sustainable way. And that's what we're going to explore, really, what the current status of financial inclusion is globally, why it is such an important economic objective, and some of the reasons why people remain excluded despite all the effort that's gone into the work so far. So then let's start somewhere. Let's start with the stats. What's the current status? Where are we on achieving financial inclusion globally?
All right, so in terms of statistics, Sarah, the practitioners, the academics, and the actors within financial inclusion, we use the Global Findex database. And this Global Findex database was actually designed by Ignacio Mas through funding from the Bill and Melinda Gates Foundation for the World Bank. And they track some indicators across 140 countries. It's really like if you're an analytical person, it's really like I don't know, a treasure. So there are a lot of indicators there that we can use to track financial inclusion across different economies. And the recent data shows that 20% of women are less likely to hold an account at a formal institution. Now, remember I said formal. There are lots of definitions for financial inclusion. It actually is a buzzword, financial inclusion. So it depends what you are talking about or from which context you are. There's the World Bank definition, there's the AFI definition, Alliance for Financial Inclusion. There's also the definition from the Fletcher School. The Fletcher School has a financial inclusion leadership program, I think, and they don't really specify whether the financial services are formal or informal. So here we're talking about the very basic way of trying to measure financial inclusion, which is account ownership. And we say the unbanked, or the stats as it is, showing that gender gap is 20% women are less likely to own an account, a formal account, and 17% are less likely to have borrowed within the past year. So these are some of the stats that people who want to look at who's included and who's not included look at. There's also another stats from the Global Index, I think, that say over 1.7 billion people are unbanked globally. So of that, I think 56% are women. So when we define who the unbanked is, you cannot run away from the women, because it says that women are disproportionately accessing financial service, if you want to say access. Or you can look at usage and also maybe the quality of products, like in the definition that you talked about for the World Bank, I think it mentions quality of products. All of that affects women. So those are the stats. And when we look at Africa, within Africa, we look at it's called the Little Black Book of Financial Inclusion Handbook, as well as there's a financial inclusion database, I think Financial Inclusion for Africa, that was published, a report that was published by the African Development Bank. That's actually a good resource also. If I don't know if they have a recent one, but I know there was a 2013 one that had good data on the differences across Africa. So now when you look at being excluded and being included within Africa, there's a difference. If you look, let's say, at a sub-Saharan Africa average, a country like Kenya will have above average stats. And this is due to M-Pesa, the mobile money wallet, and the success story that it is. If you look at Zimbabwe as well, which is a low-income country, it's classified as a low-income country, you will see that there's a stat that will be higher than the sub-Saharan Africa average. That's because of the access to digital financial services through mobile wallets as well, such as EcoCash. So it varies. And you'll see that the gender gaps also varies across continents. So it's really interesting data, and it depends what you're looking for, what you want to find, what your research is about, what you actually, the problem you want to solve with your research. But that's where we get the stats.
So thanks, Taro. I mean, so it's interesting. We almost need to go look at that data and actually try and understand it for each country that we're interested in or we live in, and think about lots of different various factors. As you said, different definitions come in, and it just depends on what we're looking at. So yeah, we definitely encourage people to go and look at that data. But following up on that, so there's a lot of people who are still financially not included, financially excluded. And including them is obviously an important goal for them as individuals. But financial inclusion has become, a term used by so many people, and a lot of funding and focus has gone onto financial inclusion, because it also has an impact not on the individuals, but also as a global economic objective. So why is it such a big thing? Why are people looking at it so much? Please tell us more.
Okay, so how I see it is, it's we're trying to solve the big problem in the world. It's really what problem out there are we trying to solve? And there are a lot of institutions or forums that look at trying to solve poverty. There's poverty out there. People want to create a better world. And how do we do that? And it's been said that the growth of an economic system can definitely alleviate some poverty or improve people's lives. So people are trying, or researchers, the UN and other forums, they want to solve the problem of poverty. And we want to do it through financial services. Why we want to do it through financial services? It's because that from the Millennial Development Goals all the way to the Sustainable Development Goals, there's been a theme that actually financial services can alleviate, can improve people's lives, can have a difference in economic growth and translating into the well-being of people. So financial inclusion has been like an anchor. It's been identified like an anchor by various people, including CGAP. I think they also say that financial inclusion enables 7 of the 17 sustainable development goals. So it is worthy of us investigating this financial inclusion theory. And still, it's become still a tropical issue to say financial inclusion, even though we've had different things happen and different opinions happen, different theories come in. Financial inclusion still is identified as an enabler for sustainable development, economic growth.
So it's a great underpinner that we really do all need to sort of focus on and put support into. One of the things that I hear a lot when we talk about financial inclusion is this concept of base of the pyramid, including the bottom of the pyramid. Where does this term come from? And is it helpful to use this term, or are there more appropriate alternatives that we have that we should be using?
Yeah, so I was also very curious about that term, the base of the pyramid, the bottom of the pyramid. And I was thinking, who really coined this term? So I did some research and I found out that actually the first time this was mentioned in a formal way that raised everyone's attention was by the then president of the United States in a presidential speech in 1923. You can Google that, where he said there should be focus on the people at the base of the pyramid. So this is like where they coined an economic pyramid and said that there are some people at the base. And there's a whole cartoon or an illustration about it. So I think from then on, we went on to other authors like C.K. Pralad. He's very, very famous about talking about the bottom of the pyramid. This term, like other terms to describe low-income people, I don't know why we still use it. I don't know if we really still use it, but we do. It's not a good term, in my opinion. And I think people who are in low-income brackets do not like to be called poor or the base of anything or at the bottom of anything. Yeah, so sometimes as economists or researchers or those actors that are trying to help people, we use the wrong words, maybe because we don't understand people or we're just insensitive or naive. But I think, yeah, it's something we still need to work on. Or we just want to put a label, a good label with fancy words on people. Yeah.
And it's difficult because we shy away from using, we don't like using the words poor, or low income or base of the pyramid. So it can be quite difficult to, describe. But I remember hearing sort of low income or erratic income might be a good way of sort of describing, the infrequent income. People, for example, who might be working in agriculture and they only get income when they sell certain crops, for example, that there's not a reliable dependent source of income, might be an alternative for describing that. And so my question is when we're talking about financial, exclusion, those who are excluded, it generally is those who are, with that erratic, lower income, probably also more rural areas rather than city dwellers. Why, what are some of the challenges of delivering financial services? to that bracket, and sort of what continues to remain, why does it continue to remain a challenge even though we're now in 2021?
It's because it's been deemed non-profitable. That segment, we didn't do enough research to know them. People focused on a certain category that had a certain income bracket for profitability. So all the research, all the products, and most of the way the systems are designed, whether it's financial systems or shopping in retail, it's been designed to target a certain segment, not necessarily those who are low income. And the reasons are because of risks, how expensive it is, what will we get out of it. There really wasn't enough investigation to support the way the systems were designed. So I mentioned C.K. Prahlad. His book, which is called The Fortune at the Bottom of the Pyramid, actually he was very successful in posing a case for the low-income people and saying, actually, you can get profits. There is fortune within that category, and we still can, through certain strategies, you still can become profitable. But it's also very controversial because the way, I think one of the controversies is the way he defined that bracket to say those who live under $2 per day. But actually the companies, mostly in India, that implemented his strategies or took up his theories, it was found that they were not addressing that bracket. It was actually higher than that, higher than $2. So to really say $2 per day is called the purchasing power parity, PPP. So really, to say that there is fortune and then still you're not really addressing that market that is said to be the one that is below poverty line. Yeah, so it's a very controversial, I guess that people who have different opinions, but there are people who have done successfully within that sector and still made profits. So if we are really serious about creating a better world and addressing poverty, I think the players who've contributed to that subject need to be taken seriously, at least, and we can try.
And I guess, we don't want to sort of do disservice to banks or mobile money operators or microfinance organizations. They can't run their businesses at a loss. They do need to make some kind of profit to cover the cost of opening branches, having infrastructure, having a network, etc. So, there is an understanding side of things that say, actually, yes, services do have to offer a profit. We can't do everything for free. So how can these sorts of companies look at, perhaps, and this is a topic we talk about a lot at DFI, is, how can transforming and bringing more digital financial services perhaps, enable us to bridge that gap and make services a little more profitable or easy to run for these kind of companies?
Mm-hmm. I think, like you rightly said, through digital financial services, you can try to serve the underserved and remain profitable. We talk about examples in Kenya that have reduced the gap of those who were previously unbanked through digital financial services. And I think how you can do this, besides using digital financial services, is trying to manage your risk. And you do this through data. So the availability of big data gives you alternative ways to credit score using alternative data. And you need to achieve scale and have a low income focus. So really creating that ecosystem through digital financial services. And when you say digital financial services, it has to be products that are relevant for that sector. You have to meet their need. You have to have your use cases that actually complementing what is required. You talked about farmers and have them having erratic sources of income. So if you're going to try and give credit, let's use a product such as credit, the features of that credit product should match the need of that farmer. So if that farmer can pay small, more frequent installments for the loan and have a season where they can take a break, and you can design that product in such a way that it's actually meeting, it's adding value to your customer, then you can achieve scale. Plus, having multiple use cases you'll be able to create the ecosystem. And when you create an ecosystem, you can scale and you can achieve volume and become profitable. That's a simple way of putting it. Easier said than done, but those are some of the ways that I think the successful stories have done it, including M-Pesa and maybe Ant in China. Yeah, although some work still needs to be done, at least those we can say are success stories.
Well, I think it's important, when we go back to the beginning, you said, over 1.7 billion of adults still remain unbanked. And so it's clear that there's work to be done, but there's also, from what you just said, it's clear that there are ways forwards. There are people who are managing to come up with products, come up with an ecosystem, develop products that are to meet people who are currently, financially excluded, and are doing so in a profitable way. So, one of my final questions to you, Tara, will be, are we looking for a positive future? What would you anticipate seeing happening in financial inclusion over the next few years? And that's a really tough one, and I know I've sprung that one on you. So just give us, your last few final thoughts on the issue.
Wow, the future of financial inclusion. Sarah, that's a good question. Because of my background and because of my passion, I am passionate about products. I'm passionate about human-centered design. So for me, we just have to try and bring in interventions into the segment that we're targeting, that is unbanked. We still have that 1.7 billion and 58% of them being women, 56. How do we bring them along, leaving no one behind? And I think it's through looking at a certain context, doing what you can do. And I think financial services providers have to be at the lead of this. I think so, because they are the ones offering these products. I think regulators, of course, need to have an enabling environment for the financial services sector. That would definitely help. I think that researchers need to dig deeper and bring out the reality of the issue so we can all learn from it. I think there's a lot that we can still do in financial inclusion. All the actors within that subject matter can still use financial services to alleviate the poor, to make people's lives better. I think it's a good plan. So I think there is work to be done. I'm not so sure if I answered your question, but yeah, I still think there is a case for financial inclusion. And I still think we can do it through digital financial services, definitely, because the scale that we need will be successful through digital. And I think we have to also single out women a little bit. I know it's a topical issue, but yes, for digital financial services and not really try and change culture, but see what works for them in their social space and the social norms and how to get around that. And I still come back to human-centered design. So yeah, that's what I think.
Brilliant. Well, I think you gave everyone listening to the podcast, whether they're a regulator, whether they're a financial service provider, a researcher, or wherever they fit into the spectrum of the digital finance ecosystem, you've certainly given them a little bit of advice and direction for going forward. And I just hope they listen and they have as much passion towards financial inclusion as you do. And then that way, I think we will make sure that we do achieve that goal of including everyone and leaving no one behind.
Well, thank you, Sarah. I enjoyed this. Thank you for the opportunity. And yeah, it's been great talking to you. Always.
Brilliant. Thank you so much for joining us today, Terero. And I hope to see everyone, including yourself, on a podcast again soon. Bye, everyone.
Thank you.